In this video, I'm going to show you a compilation of the 10 best strategies that you can use for trading. Some of them are for scalping or day trading, and others you can use in all time frames and types of financial assets. Let's see what the strategies are. In case you did not know, divergences are contradictions, which you can see on a stock chart, between the price movement and that of a particular technical indicator, such as the RSI, MACD, among others. For example, in the price chart, higher highs are produced. We can know this simply by drawing a line on the price. But in the indicator, such as the RSI for example, those highs are not getting higher, those highs are getting lower. In that case, we have a divergence because the highs of the chart do not coincide with those of the RSI indicator, and it is very likely that the price will start to fall. The same could be seen in a downtrend. For example, on the chart there are lower and lower lows, but on the RSI they are getting higher, and that's when we have a divergence, and the price is likely to start rising. For this video, we will use these divergences to execute trades. In my case, I will be operating in the euro-dollar on the 5-minute chart. The first thing we have to do is select the RSI. The parameters, we will leave them as they come by default, since what we are interested in is finding divergences. But we will not look for these divergences on the chart in which we are going to trade. We will look for them on a higher hourly chart. In my case, as I will trade in 5 minutes, I will look for divergences on the 30-minute chart. Once we are on the upper hourly chart, we just need to find the divergences. When we think we have found one, we can draw a line on the price chart and on the RSI to see if there is indeed a contradiction in the direction of the line, and confirm if it is a divergence. If we confirm that it is a divergence, we will have to go to the chart in which we are going to carry out the operation, in my case, the 5-minute chart. At that time, we will make a buy or sell operation, depending on how the price was coming. If the price comes down and we find a divergence, it is likely to go up, so we will make a buy trade. We will put the stop loss below the last big low and the take profit at a risk-benefit ratio of 2 to 1. This means that we risk 1 to get 2. If the price was coming up and we find a divergence, it is likely to go down, so we will make a short trade. We will place the stop loss above the last big high and the take profit at a risk-benefit ratio of 2 to 1. I know that at first it may seem difficult and confusing to find these divergences, but with time and practice, anyone can do it. In case you don't know what triangles are, it's really simple. Triangles are patterns that form on the candlestick chart that usually take place in the middle of the trend and usually indicate its continuation. Traders take advantage of this to get an idea of the price movement through the breakout point, which becomes a trade entry signal. There are many types of triangles, like these 3 here. The important thing is that generally these triangles continue the trend. That is, if there was an upward trend before, and that triangle is broken, it is very likely that this trend will continue. It is also possible that the trend will turn, so pay close attention to the breakout of the triangle. For this video, we are going to see it with the Ethereum chart in the 5-minute time frame. We don't need to put indicators or anything like that. Although if we want, we could put an EMA of 100 periods to use it as a filter. That is, if the price is above the 100-period EMA, we will only open buy trades, and if the price is below the 100-period EMA, we will only open sell trades. Once we have selected the financial asset to trade in the time frame, the next thing to do is look for triangles. As I showed you earlier in the images, there are many types of triangles: ascendants, descendants, and symmetrical. We can use the line tool to identify them. For example, here we find a clear example of a symmetrical triangle. Since the trend before this triangle is down, and also the price is below the 100 EMA, we are going to make a sell trade. We will carry out the operation as soon as we identify the triangle, as far as possible at the above levels, since in this way, we will obtain a better price. The stop loss in this case, we will put it above the last grade maximum, and our take profit will be the height of that triangle from where it breaks. To know the height, we can simply take the risk-benefit tool and measure it from there. It only remains to locate it in the area where it broke. Look what happened. As this was a very obvious triangle, as soon as the price broke out of the triangle, the downtrend continued very strongly, and our objective was perfectly fulfilled. Now, let's look at an example with an uptrend. Here we have an example of a triangle, which previously had an uptrend. As soon as we identify it, we will buy in the area below to obtain a better price. We will place our stop loss below the last grade low, and we will place our take profit at the same height of the triangle from the area where the price breaks. And look what happened, the price more than met our take profit target. Something that should be clarified is that on this occasion, we did not give much importance to the EMA because it was somewhat lateral. Now, let's look at one last example. We try to find a triangle. In this case, we find one with a previous uptrend. So we would expect the breakout of that triangle to continue the uptrend. So we make a buy trade at the low points of the triangle. We put our take profit and our stop loss, but this time the triangle turned around and did not continue the trend. If we are a little more conservative, we could even trade when the triangle is already breaking, although of course this will make us have less profit, and there could also be false breakout signals. The first thing we will have to do is select the simple moving average. We will use this moving average as a filter. That is, if the price is above the moving average, we will only carry out buy operations. If the price is below the moving average, we will only carry out sell operations. We will configure the moving average of 300 periods, but on a higher hourly chart. How could it be in this case 5 minutes, since the operations will be carried out on the 1-minute chart? By setting this up in this way, the moving average will take the candlesticks from the 5-minute chart. Once this is done, we will change the color to red, and we will increase the thickness to the maximum. Now, what we have to do is find trends to break. For example, since the price is now below the moving average, I will only be looking to make short trades, so the trend we need to find is a downtrend. We'll know because we can join all its ever smaller points with a line, like in this case. Once we have found that trend, we will wait for it to break and correct, that is, to cross the line that we previously marked, as it may be in this case. Once that trend has been broken enough, we will plot the Fibonacci levels from the beginning of the trend to the bottom of the trend. We will be left as follows. To place the sell trade, we will wait for the price to touch the 61.8% Fibonacci level. If the price touches it, we will carry out the operation. We will put the stop loss almost reaching the 78.6% area and the take profit in a risk-benefit ratio of 2 to 1, that is, twice what we put our stop loss. Now, let's see an example of a buy operation. We first identify the price above the moving average. In this case, we will only carry out purchase operations. Then we identify an uptrend. We can know this by joining all the high points with a line. Once we have done that, we will wait for that trend to break for a correction to take place. When it breaks out, we will plot the Fibonacci levels from the beginning of the trend to the high point. We will then wait for the price to retrace to the 61.8% zone. If it does, we will enter a buy trade. we will place our stop loss almost reaching the 78.6% zone, and our take profit in a risk-benefit ratio of 2 to 1. That is, twice our stop loss. It is important to clarify that the correction to the 61.8% zone must be made within 3/4 of the duration of the trend. To know this, we can measure how long the trend lasted with the ruler tool. Once we know how long, we will simply have to grab a calculator and divide that time by 4 and multiply them by 3. This will give us the time in which the correction to the 61.8% zone should occur. If within that time the correction does not occur, it is better not to perform no operation. The strategy that I am going to show you next does not use the traditional Japanese candlesticks, but uses the Japanese Heikin Ashi candlesticks. In case you don't know, Heikin Ashi candles are very similar to Japanese candles, and they serve to simplify a normal Japanese candlestick chart, but smoother. What does smooth mean? What it means is that if the general trend is up, most of the candles will be bullish candles. Whereas, if the trend is bearish, most of the candles will be bearish candles. In the following graph, we can see a comparison. The first thing we will have to do is select 2 EMA, Exponential Moving Average. The first EMA, we are going to put it at 100 periods, but on a chart with a time greater than the one we operate, such as 30 minutes in this case, since I will be operating in 5 minutes. This will cause the EMA to show on the 5-minute chart, but taking the periods from the 30-minute chart. In addition, we will change the color of this EMA to red, and we will increase the thickness. Since it will be the EMA that works as a filter, that is, if the price is above the EMA, we will only carry out purchase operations. If the price is below the EMA, we will only carry out sell operations. In case the price is lateral, it is recommended not to operate. The next EMA, we will set it to 9 periods, and we will leave the color as it is. Then we will select the RSI indicator, and we will deactivate the moving average that comes by default. And in addition, we will change these values to 65 and 35. And of course, we would be missing the main part of the strategy, the Heikin Ashi candles. To activate them, we simply have to display the candles section and select Heikin Ashi. And ready, we have everything ready to start operating. As we said before, the first thing we will do is locate the price. If it is above the 100 EMA, we will only carry out purchase operations. If it is below the EMA, we will only make short trades. In this case, the price is above the EMA, so we will carry out purchase operations. We will enter the trade when the RSI touches the 35 level and the Heikin Ashi candles close above the 9-period EMA. It should be noted that the RSI does not need to touch the 35 level exactly at the same time that the candlestick closes above the EMA. The level of 35 will simply warn us to be aware that we will soon open a trade. It is important that the candle closes above the 9-period EMA and the RSI has not crossed the 50 zone. If this is the case, we will carry out the buy operation. We will put the stop loss at the last big low, and the take profit in a risk-benefit ratio of 1.5 to 1. This means that we will risk 1 to try to get 1.5. Let's now see an example of a sell operation. First of all, we wait for the price to be below the 100 EMA. If it is, we will wait for the RSI to touch the 65 level. In case it touches it, we will watch for the Heikin Ashi candles to close for below the EMA of 9. If they do and also the RSI did not exceed the level of 50, we will make the sell operation. We will put the stop loss at the last grade maximum and our take profit at a risk-benefit ratio of 1.5 to 1. That is, 1.5 times our stop loss. Following this strategy, look at how many winning trades we would have had. Simply incredible. In this video, I am going to talk to you about probably one of the best strategies that you will be able to find. This strategy works for any type of financial asset, in any time frame. For the video example, we're going to test it on Ethereum in the 5-minute time frame. What we will have to do in the first place is to select an SMA or MA, simple moving average. We will configure it for 200 periods. But we will put it on a higher level chart, such as the 30-minute one. This will make it possible to see it on the 5-minute chart, but take the average values of the 30-minute chart. Then we will set the thickness to maximum and the color to green. This moving average will be the one that acts as a filter. That is, if the price is above the moving average, we will only carry out purchase operations. If the price is below the moving average, we will only carry out sell operations. The next thing we will do is select the RSI indicator. We will deactivate the average, and we will change these values to 68 and 32. Ready, we have everything configured. Now let's make an example of a buy operation. The first thing we have to do is identify the price above the moving average. Once we have identified it, we will have to wait for the RSI to touch the value of 32. In case it touches the value of 32, we will plot the Fibonacci levels from the beginning of the trend to the highest point of the trend. If the level of 32 of the RSI coincides with any of the Fibonacci levels, then we will carry out the buy operation. In case the price is close to the moving average, we will place the stop loss below it, and the take profit in a risk-benefit ratio of 2 to 1. That is, twice our stop loss. In case the price is far from the moving average, we will place our stop loss below the next Fibonacci level, also with a risk-benefit ratio of 2 to 1. Let's look at an example of a sell operation. The first thing you will do is wait for the price to be below the moving average. In case it does, we will wait for the RSI to touch 68. If it does, we will plot the Fibonacci levels from the beginning of the trend to the low point and see if any of the levels coincide with the 68 of the RSI. In this case, no Fibonacci level coincides with the price at 68 of the RSI, so we do not execute the operation. In case they match, we will carry out the sale operation. Just like before. If the price is close to the moving average, we will place the stop loss above it and the take profit at a risk-benefit ratio of 2 to 1. If the price is far from the moving average, we will place the stop loss at the next level Fibonacci, also with a risk-benefit ratio of 2 to 1. Some considerations to take into account when applying this strategy would be do not trade when the moving average is flattened, as it could be in this case, as it could give us many false entries. It is convenient that at the moment of carrying out the operation of buying or selling, we have an engulfing candle. That is in the following way. Since this will generate much more confidence in us, and we will have greater opportunities to hit that trade. I'm going to explain it to you in a very simple way. It is simply a candle engulfing another candle following a trend, and this indicates a change in trend. For example, let's imagine we have an uptrend, and suddenly a red engulfing candlestick pattern appears that indicates that the trend may turn around, since sellers are gaining strength. Now, let's imagine we have a downtrend, and suddenly a green engulfing candlestick pattern appears that indicates that the trend may turn around, since the buyers are gaining strength. But only this pattern is not enough to make the trades. That's why we are going to combine it with two EMA, exponential moving averages. The strategy can be used on any type of chart, and it is recommended to use it for scalping or day trading. In my case, I'm going to use it for Bitcoin on the 5-minute chart. The first thing we will have to do is select two exponential moving averages. The first, we will configure it for 150 periods, but on a higher hourly chart, in this case 30 minutes, since we are operating in the 5-minute. Setting this up will make it possible for us to see the average price from the 30-minute chart, but on our 5-minute chart. Also, we will change the color to green, and we will increase the thickness to the maximum. The other EMA, we'll set it to 100 periods and change the color to pink, and increase the thickness a little bit. We will only make buy trades in case the price is above the 2 EMA, like in this case. And we will only make sell trades in case the price is below the 2 EMA, like in this case. We will try not to trade if the EMA are flattened, as it could give false signals. It is preferable that the EMA have enough angle. In the case of a buy, we will first place the price above the 2 EMA. We will then look for an uptrend and wait for a drop in price. When we have found this drop in price, we will wait to see an engulfing candlestick pattern for the price to resume that trend. It is recommended that this pattern be as clear as possible and completely encircle the other candle. If we find it, we will carry out the purchase operation. We will place the stop loss below this pattern, and our take profit in a risk-benefit ratio of 1.1 to 1. This means that we risk 1 to try to get 1. Let us now see an example of a sell operation. In the case of a sell, we will first place the price below the 2 EMA. We will then look for a downtrend and wait for the price to rise. When we have found this rise in price, we will wait to see an engulfing candlestick pattern for the price to resume the trend. It is recommended that this pattern be as clear as possible and completely encircle the other candle. If we find it, we will carry out the sell operation. We will place the stop loss above this pattern, and our take profit in a risk-benefit ratio of 1.1 to 1. This means that we risk 1 to try to get 1. Let's do some more operations. Look at all the trades we would have won with this strategy. Simply incredible. The first thing we will have to do is select the indicators. First, we will select two EMAs. We will configure the first one with 100 periods, and in the type of graph we will put one greater than the one we operate. In this case, we will put 30 minutes, since we will operate in the 5-minute one. We will change the color to green and increase the thickness to the maximum. This EMA will serve as a filter. That is, if the price is above this EMA, we will only buy. If the price is below this EMA, we will only make sell trades. The second EMA, we will put it at 50 periods. We'll change the color to pink and increase the thickness to 2. Then we will add an RSI indicator. This indicator does not need to be added, but it is useful if you want to have more security when performing operations. Once we have added all the indicators on the chart, we will go to a higher hourly chart. In my case, I will go to the 30-minute chart, since I will trade on the 5-minute chart. In this 30-minute chart, we will have to mark with a red line all the most relevant supports and resistances that we see. In case you don't know what support and resistance are, support is a price level where a downtrend can be expected to pause due to a concentration of demand or buying interest. As the price of assets or securities drops, demand for the shares increases, thus forming the support line. Meanwhile, resistance zones arise due to selling interest when prices have increased. Once we have marked all the supports and resistances on the 30-minute chart, we will return to the 5-minute chart, and we will do the same but with yellow lines, since these supports and resistances will be weaker than the supports and resistances of the higher time frame. We will only have to mark the most important supports and resistances, not all of them, because otherwise the graph would be filled with lines. Once this is done, let's look at the example of a buy trade. First of all, we will wait for the price to be above the EMA of 100 and if possible above the EMA of 50, although this is optional for greater security. We will buy when an engulfing candlestick pattern appears in a support zone. We will place the stop loss below this pattern, and the take profit in a risk-benefit ratio of 2:1 in case the support is red, or a risk-benefit ratio of 1.5:1 in case the support is yellow. For greater security, we can check if at the point where the pattern was formed, the RSI is in the 30 zone. But this is optional for greater security. In case the price is below the EMA of 100, we can also open buy trades, but with a risk-benefit ratio of 1.5:1 on the red supports or a risk-benefit ratio of 1:1 on the yellow supports. Although, of course, operating in this way is a little more risky. Let us now see an example of a sell operation. First of all, we will wait for the price to be below the EMA of 100 and if possible below the EMA of 50, although this is optional for greater security. We will sell when an engulfing candlestick pattern appears in a resistance zone. We will put the stop loss above this pattern, and the take profit in a risk-benefit ratio of 2:1 in case the resistance is red, or a risk-benefit ratio of 1.5:1 in case the resistance is yellow. For greater security, we can check if at the point where the pattern was formed, the RSI is in the 70 zone, but this is optional for greater security. In case the price is above the EMA of 100, we can also open sell trades, but with a risk-benefit ratio of 1.5:1 on the red resistances or a risk-benefit ratio of 1:1 on the yellow resistances, although of course, operating in this way is a little more risky. Now, let's do some more operations. Look at all the winning trades we made with this strategy. Simply incredible. This is without a doubt one of the best strategies I brought to the channel. The first thing we will have to do is select the MACD indicator and put the parameters of 20, 40, 20 on it. We will change the signal line to red, and we will also deactivate the histogram, since it can confuse us. After adding the MACD indicator, we will have to mark with a red line all the most relevant supports and resistances that we see. In case you don't know what support and resistance are, support is a price level where a downtrend can be expected to pause due to a concentration of demand or buying interest. As the price of assets or securities drops, demand for the shares increases, thus forming the support line. Meanwhile, resistance zones arise due to selling interest when prices have increased. This simple strategy is based on the MACD line crossing with its signal line, indicating the entry for a trade. The price moves between ups and downs, giving the shape of curves that the MACD clearly shows in its movement. In case you did not know, the MACD indicator collects information from different moving averages and thus helps to identify possible investment opportunities close to support and resistance levels. Now, let's see how to use it to buy. We will open a buy trade when the MACD line, blue, crosses from below to above its signal line, red. We open a buy order at the opening of the candle. We will put the stop loss below the last great low, and our take profit in some zone of support or resistance previously marked, as long as our risk-benefit ratio is equal to or greater than 1 to 1, that is, we risk 1 to win 1. We will open a sell trade when the MACD line, blue, crosses from above to below its signal line, red. We open a sell order at the opening of the candle. We will put the stop loss above the last great high, and our take profit in some zone of support or resistance previously marked, as long as our risk-benefit ratio is equal to or greater than 1 to 1, that is, we risk 1 to win 1. Let's see some more operations. Simply incredible. This strategy works very well on high time frames. The first thing we will have to do is select a smooth moving average, SMA. We will make this smooth moving average of 50 periods. We will change the color to green and we will increase the thickness. The next thing we will have to select will be the MACD indicator. We will change the parameters to 20, 40, 10. We will change the color of the signal line to yellow. And in addition, we will deactivate the blue line. The MACD, Moving Average Convergence Divergence, was created by Jared Appel and is based on the difference of two exponential moving averages to which a third exponential moving average is applied. The MACD is made up of two lines that oscillate around the zero line. The first one is the difference between the two moving averages, and the second one is the exponential moving average of the difference, signal line. Once this has been explained and everything configured correctly, we can begin to operate. To carry out a buy operation, we expect the price to go above the 50-period smooth moving average. Then we expect the MACD to cross its center line from bottom to top. A buy order will be opened at the opening of the next candle. We will put our stop loss below the last great low or below the moving average, if we have it close, and our take profit in a risk-benefit ratio of 1.5 to 1. This means that we're going to risk 1 to try to win 1.5. Also, if we prefer, we can put our take profit in the support and resistance zones. In case you don't know what support and resistance are. Support is a price level where a downtrend can be expected to pause due to a concentration of demand or buying interest. As the price of assets or securities drops, demand for the shares increases, thus forming the support line. Meanwhile, resistance zones arise due to selling interest when prices have increased. To carry out a sell operation, we wait for the price to go below the 50-period smooth moving average. Then we wait for the MACD to cross its center line from top to bottom. A sell order will be opened at the opening of the next candle. We will put our stop loss on top of the last big high, or above the moving average, if we have it close, and our take profit in a risk-benefit ratio of 1.5 to 1. This means that we are going to risk 1 to try to win 1.5. Also, if we prefer, we can put our take profit in the support and resistance areas. Let's see some more examples. Incredible. It is important to clarify that the longer the time frame in which we will operate, the more successes we will have. It is also much better if we put our take profit in the support and resistance areas, or even at Fibonacci levels. The first thing we will have to do is select the MACD indicator. We will configure this indicator with the parameters of 2138.1. For the signal line, we will change the color to yellow. The MACD line, we will deactivate it. And to the signal line, in addition, we will change the type of line to histogram. Once configured, we should have something like this. The next indicator to add to the chart is the ADX+rsi indicator. With the following configuration of 25 and the following colors. In case you don't know what the ADX indicator is, the ADX, Average Directional Movement Index or Movement Index. Average directional has 3 lines, ADX, white, +di, green, and -di, red. The ADX line indicates the strength of the current trend. If it is above the value of 20, the current strength is starting or has already started. The +di line indicates the strength of the uptrend. If it is above the value of 20, this trend is strong. And the last line, the -di, indicates the strength of the downtrend. If it is greater than 20, the downtrend is strong. A value below 20 would indicate that the trend is weak. If the +di, -di, or ADX lines are below their value of 20, the current strength of the market has diminished and we may enter a range or sideways trend, the same as if all 3 lines are below 20. This strategy works with the strength of a trend, that is, when the financial assets enters a strong trend, whether it is bullish or bearish. If the financial asset enters a lateral trend, this strategy will not give any entry signal or it may give us a false signal, but for this we have the ADX. The signal is very simple to understand and apply. First, the ADX should tell us that a trend is beginning. Second, the MACD will confirm the trend and give us the entries for the operations. But let's show it with examples. Let's start with an example of a buy trade. We will buy if the ADX and plus die lines are above 20 and the minus die line is below 20. If this is true, we will see that the MACD has one of the following forms. If this is true, we will open a buy trade. We will put our stop loss at the last low or high, and our take profit in a risk-benefit ratio of 2 to 1. This means that we risk 1 to get 2. It is also preferable to place the take profit in the support and resistance zones. Now, let's see an example of a sale operation. We will sell if the ADX and minus die lines are above 20 and the plus die line is below 20. If this is true, we will see that the MACD has one of the following forms. In case this is fulfilled, we will open a sell operation. We will put our stop loss at the last high or low, and our take profit in a risk-benefit ratio of 2 to 1. This means that we risk 1 to get 2. It is also preferable to place the take profit in the support and resistance zones. It is always preferable that when checking the MACD, the bars are not too close to the center line. Let's see some more operations. This strategy is simply amazing and effective. And ready, I hope this strategy has been useful to you. Do not forget that before trying it with real money, you need to try it in a demo account so that you can put it into practice by yourself. Do not forget to subscribe so as not to miss any strategy, as we upload the best strategies every week.